We are joined by Brian Belski, Chief Investment Strategist at BMO Capital Markets. Brian, thank you so much for joining us. I want to start with what we are seeing today. As I mentioned, all major indices right now are in the green. The S&P 500 challenging that 3,400 level. Do you see markets right now as rage bound, or do you think that there's enough catalysts out there to see the market break through?
Well, thanks a lot for having us. Following a very volatile September, I think most investors forget that September is the only month of the 12 that is traditionally a negative month. If you go back and look at price performance since 1945, you'll see that September is typically negative. And we had a quite volatile September. And as we enter into this election season, everyone's already decided that we're going to have volatility surrounding the election. Everyone's already decided that things are going to be negative. Everyone's decided that things have run too far, too fast. We actually think that the market could pop on the upside to surprise most people. I think the pain trade, quite frankly, is higher, not lower, with everybody and their mother, brother, sister, cousin, uncle saying that we're range bound for a while. I wouldn't be surprised if we see a little bit of a bounce here again. On a pop here. I'm not a near-term market forecaster or a longer term. We still think stocks are mired in a 20-year bull market, which the second half of the bull market started on March 23rd. And we think it's one that continues to be defined by negativity and rhetoric. So again, on a near-term basis, I would not be surprised if the market sees a pop here.
So to that point about the elections, you had mentioned some volatility there. I'm wondering how much choppiness do you think is going to be around the elections? And do you think, as many people had been saying, that that the base case right now is for a contested election? Are you seeing it that way?
I don't know. I mean, everyone's already decided that there's going to be a blue wave. Everyone's already decided that Joe Biden's going to be president. Everyone's already decided that we're going to have a contested election. Everyone's decided that the ballots aren't going to count. I don't know how anybody knows that. I don't know how anybody knows that for sure. And again, it's just all based on conjecture and rhetoric. And we see what happens in markets when people make decisions on conjecture and rhetoric. We saw it in March when the market was too negative. We saw it 4 years ago, the morning after the election, and how things were whipping around in terms of politics. So we say this, and we've been very clear: politics have nothing to do with the absolute performance of the stock market. They can either enhance or detract the current trend. The current trend is recovering, and so we think on a fundamental basis the markets look good. I think people, by and large, give policies and politics way too much credit for the direction of the stock market.
You also said that markets right now are being hypocritical. Hoping you can share why.
Well, if you think about this, everybody seems to not like the president, not like the United States, but we like it when stocks are up, and we would like it when we think we know that President Trump is safe and everything, but we don't want him in office. That's what I mean. It's hypocritical, and it's stereotypical, I think, quite frankly, to the negative view of investors really for the last 20 years. And we can say it all we want. We climb the wall of worry and all this kind of stuff. It really, the basis is this: the United States stock market's the best stock market in the world, with the best companies in the world, and that's why stocks are going up. And we think this predominant negativity that's surrounding investing, politics in America in general, has to go away. So let's be happy that we live in the greatest country in the world, and that we've been given a gift by this zero interest rate policy, and we're on the road to recovery.
So I know, Brian, you're saying that you are you're no fortune teller, but I'm still going to ask you anyway to try to read the crystal ball, so to speak. Stimulus. There's renewed optimism on a stimulus deal. Not too long ago, it seemed the markets had really baked in that stimulus, that we were definitely going to be getting a deal. Now, that was weeks ago, and we're still seeing those negotiations. While they are inching forward, we still haven't gotten the ink dry on a deal as yet about that. Do you think that that's going to serve as a catalyst to send markets higher, or do you think markets right now have baked in that we're definitely going to be getting a deal perhaps in the next week or two?
I think it's tough to say. And again, that's why I think people give politicians way too much credit. However, the politicians are put in their place by the people, and the people expect them to support them. And so I think what's going to end up happening is, common sense wise, we're going to get a stimulus bill done. I don't know what the exact number is. I think people focus too much on the number and less on the fact that stimulus is coming, and it is going to provide further confidence with respect to what's happening in this new world of coexisting COVID-19 coronavirus. So I think the market is already anticipating a stimulus bill. And I think, again, people are making way too much out of what exactly the number is. Just have some solace to know that a stimulus bill is coming.
All right, I've got about a minute and a half left with you, Brian. I want to ask about earnings. Earnings season is coming up. What is your outlook there? What are you expecting? Do you think that the earnings season will be as strong as some of the earnings reports that we had for the second quarter?
I think it will be. It's a great question, but I think the bigger question is, what do earnings look like in 2021? I think the current quarterly earnings really have nothing to do with the current trend of the stock market. I think it's all about 2021 and if we can have some sustainability. But more important, if we can have some sort of transition with respect to a majority of sectors, industries, and stocks starting to show stronger earnings growth. And I think that's what we're going to be seeing in 2021. It's still very concentrated in some areas of technology, consumer discretionary, communication services, and some healthcare stocks right now.
All right, we will leave it there. Brian Belski, always great to chat with you, Chief Investment Strategist at BMO Capital Markets. Thanks for joining us today.